We just heard from the Reserve Bank Governor. He has given us an indication that the end of rising interest rates is close, but not quite yet. It is a month-to-month proposition. I want to bring in Ross Greenwood, our business editor, who joins us now. Ross, you were watching that, of course. What was your take?
Well, it's exactly as you say. The Reserve Bank right now sees an end to these interest rate rises, 10 in a row that they've had, which have put significant hurt on many families, with a typical mortgage up to $20,000 after tax per year, an extra cost for those families, on top of inflation and energy prices as well. But what he does indicate is really it's the cessation of the inflation that we've seen in Australia's economy that they see starting to ease, that has already peaked. That this is the reason why they believe a pause will be necessary, because there will be a build-up effect of these interest rate rises that will start to hurt Australian families even more as we go through 2023. Just a couple of interesting grabs from the Governor. We'll play the most important one, the one that we've heard a little clip of just already, just explaining that he thinks these interest rates are now coming to an end.
We also discussed that with monetary policy now in restrictive territory, we are closer to the point where it will be appropriate to pause interest rate increases to allow more time to assess the state of the economy. At what point it will be appropriate to pause will be determined by the data and by our assessment of the outlook.
Now, Laura, one of the important parts about this is the Reserve Bank is determined to beat inflation, because it says long-term the hurt of higher inflation is going to be greater for Australia's economy. There's one small issue about this, and that is the Australian dollar. Now, the Australian dollar has literally plunged since yesterday. The Reserve Bank gave an indication that the end of these interest rates is coming closer. And as a result of that, you see the Australian dollar today sitting in the 65s, and this is really a significant fall. The problem of a lower dollar is it adds to inflation. You can see here, even right now, it's a little higher this morning in trading, but has plunged really only in the last few weeks from above 70 US cents down to 65.8 US cents. A lower dollar equals inflation. But let's pick up again Philip Lowe talking about inflation and the determination to beat it.
If we don't get inflation down fairly soon, the end result will be even higher interest rates and more unemployment.
You see, Laura, there is a dilemma. This is the reason why they won't commit to any pause in interest rates just yet, even though they say it's coming closer.
Yeah, absolutely. I mean, there's a big change really in the statement. Ed Boyd, our business reporter, was there. That was the question he asked of Philip Lowe. Why has he gone from being a hawk to a dove? Quite the chameleon. He rejected that. What did you make of that exchange?
Well, it is true to say that we did a comparison yesterday of the document that the Reserve Bank put out a month ago and the document it put out yesterday. And normally there's very subtle changes between month-to-month statements. Yesterday there were wholesale changes. The language had completely changed. And that was the justification for that question, to ask what had happened in that time. Now, Philip Lowe then went on to say effectively that it was as a result of the changing economic data that the Reserve Bank was seeing, which indicated, say, for example, that the employment numbers remain very, very low. Also, that there was a hint that inflation had turned the corner. But the problem is that even if inflation now, the underlying inflation is still in the high sixes, it's still well above the current cash rate of 3.6%. So talking to the former Reserve Bank Director, Warwick McKibben, yesterday, one of Australia's most acknowledged economic experts, he still says that the cash rate needs to be somewhere between 4 and 5%. Which is a lot more interest rate rises before you start to get this equilibrium in inflation and certainly in economic output in Australia. So there is still work to be done for the Reserve Bank, you sense, especially when you heard overnight the US Federal Reserve indicating that there will be more interest rate rises there. They're determined to beat inflation, and hence the big 500-point fall in the Dow Jones index overnight.
Yeah, I wonder if Canberra will pick up on one thing that I did as well. Basically, Governor Lowe saying one thing that's going for us compared to the rest of the world is that wages growth is still not too high, quote unquote.
Yeah, that's right. And it's true, because the fact of the matter is that you sense at some point there's a wages catch up. You can't have real wages staying as low as they are right now forever, especially when you've got, labour shortages in so many areas. Now, something's got to give. Either unemployment starts to rise and pressure comes off those wages and remains off wages, or wages claims become greater. Now, some of the private surveys being done have indicated previously that wage rises are much higher than the official Australian Bureau of Statistics numbers that are coming out. And so this is where there's something, if you like, of a strange sort of, if you like, correlation between where real wages are and indeed where the workplace is seeing them right now, and whether there's something of a disconnect between the official data and what's happening on the ground.